29th. And today we're looking at edition 72 of the paper titled Crypto for a Cause. We're going to take a look at some donations that went on in the industry and also a couple other stories that are usually taking place here. So getting into it, again, disclaimer, all information here is for educational purposes only. This is not intended to provide financial advice. I'm not a financial advisor. This should not be construed as financial advice to help you make a trade in the market or anything. Seek a financial advisor if you're going to do anything like that. Not here. Anyways, again, just to get this out of the way, if you want to subscribe to our newsletter, check out the dailybit.news. It's Monday through Friday. We just sent out our edition earlier this morning. And again, like these videos are going to cover a quick recap of everything that's going on here, and then I can share my kind of 2 cents to go along and corroborate anything that we're writing about in the paper. So, again, moving on. Our table of contents today. Wasn't much activity in the market, so we figured we were cutting word on the street down to just one article to focus on these two donations. Get two down there. For Where's Blockchain, we're looking at B3I and their blockchain solutions that they're starting to commercialize for the market. For our Bulls and Bears, we're circling back to Abra CEO Bill Barhydt and his prediction for the future conditions of the market and where he sees that going. For our bearish article today, we're taking a look at Twitter. They apparently had a report released on them by a famous short-selling firm that basically says Twitter may be profiting off of user data, and obviously with what's going on in Google and Facebook, that might freak people out and also lead people to begin selling Twitter stock. And for education, we're wrapping up with leading and lagging indicators, and we're actually going to take a look at TradingView and see how some of these play out in the market and how you can use them if you're a technical analyst and want to take a look at that there. So, starting off, tweet of the day. This comes from Alistair Mine. And Alistair says, if you believe in Bitcoin and you shouldn't be buying if you don't, which, quite frankly, I agree, then it shouldn't really matter if you're buying at 5,000, 6,000, 7,000, etc. You're hoping for that extra zero not to make 1,000 more per coin. Hold until the next halving, May 2020 at the earliest. I'm not suggesting that. Well, first off, I have no idea whether or not holding until the next halving is going to be a good idea. I'm not saying you should do that or not do that, but Alistair definitely thinks that that is the move, and also it's a good point. If people are really bullish on Bitcoin and thinking that it is going to shoot up to $30,000, $50,000, then these $1,000 differences really aren't going to make that much of a difference at the end of the day. Even if Bitcoin hits $3,000, even if Bitcoin hits $30,000. Right now it's around 7.5K. That's just around a 500% increase. So you buy 8,000, 9,000. I mean, you're still going to get a 400%, 300% flip with your investments. So I mean, it really comes down to: do you believe in the technology? Yes, and then after that, just buy, or pick a position to buy that you personally think is going to be good. Not saying that anything is good or bad here, or if it's going to go higher or lower. But again, he's making the point that if you want to go for the long haul, then you might as well start buying now and just hold until 2020 when the prices should at least go up until then. Again, who knows, but word on the street, we're looking at an ROI that communities can see, and this is touching on OmniSago and Ripple specifically. Each of the companies announced that they were making donations to charitable causes, and Ripple more so than OmniSago. OmniSago is donating $1 million in USD in OMG tokens to impoverished refugees, and they make a really great point about this, and I think this is just generally quite awesome. They're using this program, Give Directly, which will deliver the funds straight to the refugees. So instead of delivering to a normal nonprofit, which might use the funds for causes you're not entirely sure about, Give Directly takes the money and transfers it right over to refugees. So OmniSago is directly funding or directly backing these citizens who don't have really much financially, or kind of moving from one country to another, and these host countries that they're arriving to, there really isn't much that these people are able to bring with them other than clothes on their back and any skill sets that they might acquire. All of their capital that they previously had, or any finances that they previously had, usually has to be given up or left in the country that they originate from. So it's a really big issue, and OmniSago is trying to come into the environment here and allow people to opt out of centralized banking, and in that sense use OmniSago wallets to transfer their currencies around with each other, and then also be able to store your OmniSago using this public key cryptography and not have to rely on a financial system that many of these citizens and refugees aren't even able to sign up for because they don't have any capital, they don't have any IDs, there isn't anything that's going to enable them to register with a bank and even set up an account. So this is where OmniSego really is trying to decentralize the financial sector by creating these personal banks for citizens. And here with refugees in this donation, it really gives them an opportunity to kind of get on their feet, find a means of paying and securing all their funds and managing and transferring their tokens to anybody and to other retail stores where need be. So again, I think it's really cool, and we'll keep an eye on OmniSego. Obviously, they were speaking with the Bank of Thailand, and who knows what conversations are going on down the road with that as well. Now, Ripple. So this is a bigger donation. Obviously, 29 million is much larger than 1 million, and the cause here is very neat. So Donor Choose is basically, I see it as an Amazon's version of a wish list for projects and school funding. And here, Ripple made this donation. It's the largest cryptocurrency donation to a charity ever, and they're funding all 35,000 projects on this site. So they completely wiped the board with everything that was on the website, and now more projects are going to be added as a result because there's nothing really being taken care of right now. But again, Ripple is going to impact 28,000 teachers across all 50 states, and this is a really good look for the company. And whether or not you're a fan of Ripple, or if you think it's too centralized, you wish it was more decentralized, this clearly is great. It shows that they're committed to helping out the community. They're committed to providing an education for our youth, who hopefully who eventually are going to lead the country, take up roles that Ripple's founders are currently in, people just leading business are currently in right now. So again, this is a really great look, I personally think. And again, these moves by Ripple and OmniSego, they're giving back to the community from people that have become very, very successful and very profitable off of cryptocurrencies. So, I mean, you can't say that about every industry where if you invest, you're going to become super wealthy. Obviously, that is definitely not the case for cryptocurrencies after we've seen the market kind of tumble since mid-January. But for those that did get in early enough, there's this huge amount of wealth that everybody is basically sitting on. And it's important to not really forget your roots, understand where you come from. And the fact that some of these companies understand that there's a lot of people out there that aren't able to have the same benefits as they kind of were able to reap, and understanding that some of that money should be going back to some of these organizations that are going to build up infrastructure for our communities, for our education, for our technology, and just for people that need these donations to kind of help them get on their feet. It's a very cool thing to understand and know that crypto is getting involved in that, and it's not all hyped up talk about Lambos and going to the moon, and all that stuff is really just it's not as important as actually donating and giving back. So I think this is very awesome, and we'll see if this impacts the prices of either coin. But again, the markets in general are just sliding right now, so I think this is more of just a good faith kind of thing here that's going on. Now, for Where's Blockchain, we're looking at B3I. B3I started out as a blockchain consortium for the insurance industry. So they were backed by a couple major companies in insurance where they're looking for blockchain solutions like every other, like the supply chain industry is looking for blockchain solutions, like accounting and invoicing companies are looking for solutions there. Like healthcare is looking for solutions with blockchain. This is just the insurance industry's blockchain consortium, and again, they're testing out solutions that they can use for the industry to again just improve the way that these companies are able to operate, make their transactions more secure, cheaper, safer, improve these products for the environment. And a big announcement came out of their end where Blockchain Institute the initiative is going to go full-fledged into a private company and an institutionalized company. And the reason they're doing this is the products that they're beginning to test, at least one of their products for blockchain solutions for reinsurance, so any housing catastrophes where homes are destroyed or whatever, they would be looking into insurance policies for I guess those initiatives in those areas. But one of the first products that they tested saw that there were efficiency gains of 30%. So they're looking at this and saying, well, look, like it clearly works. This is something that we would be able to market and we would be able to sell to the public. and kind of help people start adopting blockchain and these solutions to kind of continue to improve their businesses and hopefully see some similar returns that we did. So again, this is just an announcement to let them know that they're kind of going to the next level with this, and we'll see how that goes. But again, the leadership, Gerard Lohman, he's the CFO of reinsurance for Swiss Re, or Swiss Re, they're a Swiss-based company. But again, he clearly is a good fit because he's already involved in reinsurance. He's involved in reinsurance, so again, he should be able to give some proper guidance there. And speaking about the transition, Lohman said that, quote-unquote, the transition of BI3 from consortium to independent company is a concrete step forward to realizing the enormous potential of blockchain for the insurance industry. And it is. I mean, you're going to have some of these, I guess, organizations take the wheel here and understand that somebody's going to have to step up in order to get things going, get the wheel moving with implementing and adopting these blockchain solutions in industry. So again, I'm sure that, or I would like to think that some of these other consortiums, whether it's in trucking, again, supply chains, whatever it might be, some I would expect to kind of make this conversion too and follow B3 as a lead and see what they would be able to drum up for, for I guess, companies within their sectors. What else you should read today? So we all know Facebook, Google, Twitter, and Yandex too. They've banned these crypto advertisements, but this new cryptocurrency organization called the Eurasian Blockchain Association, they are suing the big dogs. They're going to try to see if they can, I don't know, turn the tide in court and and reverse their decision to ban cryptocurrency advertisements. I personally don't think there's much hope here. That's what the general sentiment is online too. I mean, the fact that they're private companies, they're able to decide what advertisements you're going to post on your site. So I really don't think there's much weight here with the EBA. Obviously, there's definitely companies that feel slighted and feel that they deserve to be advertised on these platforms. But again, it's a private company. It's up to them to decide what they want to put here. And also, I would expect that, I mean, the budget on Facebook, Google, Twitter, and Yandex's end is going to be much, much higher, I think, than a blockchain association that's only been around for a couple of weeks, maybe, if that. So, again, I don't think this will last too long in court. It's going to be an attempt to fire some shots at these guys, but, I mean, the corporations are just they'll gobble them up, and it's really going to come down to when they do want to accept cryptocurrency advertisements that I really do think that something's going to happen here. For Overstock, their stock has been kind of falling. Went down about 3.5% on Wednesday, and this is because, for at least one reason, along with the general market downturn too, the SEC has been investigating one of their subsidiaries, T0. So again, the fact that that's going to trail back up to Overstock doesn't look great. Has to do with cryptocurrencies again and all the scrutiny that's going on with the market. But again, until that's really settled, I don't know. Maybe just be cautious about Overstock. So. Again, moving forward with this, going paperless with your private keys. There's an interesting article on Medium that someone posted about removing the physical key from the equation and using a sequence of images to store your private key in your brain, your recovery seed. So for wallets such as Ledger or Trezor, there's usually a 12 to 24 word recovery phrase that you can input into your device if you lose your device, or you can input into your account to recover your funds, whether there's something lost or you get locked out or whatever it is. But the thing is, if you write that down on a private key and somebody gets their hands on that paper, they automatically have access to all your funds, and they would be able to take all your funds away out of your wallet, and you're basically screwed. So if you were to use this Dropbox approach, the idea here is that you would be able to look at the images and know and be able to drum up the words and think of the words that the image relates to. It doesn't necessarily have to be the image specifically, but just a reference to something that makes you think of your actual seed words. And this is a way to eliminate that risk of writing things on paper and just storing them in your brain. Again, there's risk that comes with that too, but I thought it was an interesting piece. Bitcoin Cash trading pairs are now gone from KuCoin. This, again, isn't too surprising for the most part. There really aren't many Bitcoin Cash trading pairs out there to begin with. So the fact that they just weren't used kind of shows that it's not going to be profitable. It's requiring too much of a commitment by the exchanges side to kind of get these up and running. for the most part, again, it's either a fiat trading pair with US dollars, GBP, whatever it might be on whatever exchange it could be at, or there's going to be Bitcoin trading pairs. There's a few others for Ethereum too. I believe Bittrex has some Ethereum trading pairs, but for the most part, it's all Bitcoin. Bitcoin is king for now, and until Bitcoin Cash really gets more integrated there, I really don't think this is too surprising of news. This news is too surprising. So again, that's that. And then another article just talking about applications of blockchain technology that could potentially make way soon. One of them I saw on there was auditing and accounting purposes. So again, if you want to take a look at that and see what short-term solutions and initiatives are being adopted, then by all means take a look. Moving on, bulls and bears. So the Abra CEO, Bill Barhydt, we were just talking about them the other day because Abra has a product called synthetic currencies, and it's a very, very interesting technology, which basically allows them to gain exposure to an asset without holding the actual underlying product. So, like Abra is rolling out their Litecoin smart contracts in probably about a week now, and right now they only use Bitcoin smart contracts. But let's say you wanted to buy a position in Dash. If you executed the contract right now with Bitcoin smart contracts on Abra, you would gain exposure according to the exchange rate in Dash to Bitcoin at that time. And then when you wanted to close your position, another conversion would take place at the exchange rate at that moment, and then whether or not you were above or below your initial entry rate according to Dash's price in BTC, then you would gain your account balance would either increase or decrease by that amount in Bitcoin. So again, it's really innovative technology, and Bill's been talking to a bunch of hedge fund managers, high net worth individuals in the space, and people that are watching the volatility in cryptocurrency very closely. And he thinks that, I mean, in his words, all hell is going to break loose when these people get involved in the markets. Right now, Bill's explaining that there really aren't many Western institutional investors that are involved in the market. They're all still sitting on the sideline. Most of that growth is coming from Japan's market and Asian markets in general, where their companies have already seen the hype, already have gotten a chance to get used to the space, mainly because their investors were also driving most of the growth. So it made more sense for them to get involved earlier, whereas I guess America was kind of late to the game to get involved with cryptocurrencies at the same scale as South Korea and Japanese investors were. But again, Bill's spoken to these managers, and once they really do get involved and start taking a slice of their portfolios and maybe giving it, I don't know, 0.5%, maybe perhaps even a full percentage of an allocation to cryptocurrencies as a diversification strategy, that's when he really thinks that we're going to see the floodgates open up and the money really start to flow into the market. Until then, I'm sure that a bunch of these companies are kind of getting prepared right now. We see that there's already partnerships coming up. There were a ton of partnerships we talked about yesterday, and even the other day before that, Request Network and PwC, these companies are getting involved, and they're slowly partnering up with blockchain projects and startups that they really think are going to benefit them the most. So again, we'll see how everything goes with this, but the CBOE has even stressed to the SEC that they think that it's time for cryptocurrency ETFs to hit the market. So, and they weren't taking that stance a couple weeks ago and a couple months ago. So the fact that that's also changing too shows that they really are ready to launch additional products as long as the regulatory approval is there. So again, and also once these institutional investors get involved, Barhydt thinks that there's going to be sort of a halo effect on the rest of the market, where retail investors are going to take a look at these companies and say, oh wow, like I didn't realize that these guys are invested in Bitcoin or Ethereum. I thought that it wasn't worth the investment. Now I might reconsider and go on to your exchange of choice and actually make a purchase. So right now, where the latest run-up was really driven by a lot of speculation, the fact that, well, Bill basically is predicting here that, again, if these companies are buying in, there's not going to be as much speculation driving the purchases the next time markets really pick up. It's going to be based on conviction that this is actually something that we can work with, and faith in the market actually increasing over time because there's actually solid fundamentals behind some of this technology, and companies are beginning to use it. So again, that's just his 2 cents. Take it or leave it. It's clearly not going to impact the market based off of one opinion, because everything has been sliding. But again, it'll be interesting to look a year, 2 years, 3 years down the road and see whether or not he was correct here. Now, Twitter. So Twitter is joining Google, joining Facebook, joining all these companies that have led to this kind of disgusting revelation that, and kind of scary revelation, that all of our user data is being tracked by these companies, and we have a digital version of ourselves that's basically just these massive files of information. It's all stored at Google, stored at Facebook, and all of your deepest, darkest secrets, everything that you can imagine, everything that's ever said between your friends, anything you've looked up, the locations you've been, your search preferences, the applications that you've stored on your device, it's all recorded. Everything's there. And obviously that's kind of blowing up in Facebook's face right now. Zuckerberg is speaking with Congress in April. I believe Twitter's also going to be attending a hearing on data privacy on April 10th. But the idea here is that a short-selling firm, Citron Research, they're infamous for shorting stocks into the ground, anything that they think is going to go bearish. They make it very, very publicly known that they are going to be shorting something. And they just announced that they closed their loan on Twitter, and they really think that these public concerns about data privacy could blow up in their face and cause additional downside for Twitter stocks. So they put together a report releasing their findings on Twitter, and they found that they estimate that about 80% of Twitter's total profits from 2017 could have came from selling user data to advertisers and other folks. So obviously this is kind of this is another sounding of the alarm bells here. You can see that since kind of late Monday, early Tuesday, Twitter really fell, and this was seen in the rest of the markets too. So again, it's not just strictly due to data privacy concerns. Overstock had some fallout too, as we could see, but again, this really isn't going to be good for Twitter if they are pressed by Congress too. If there's more regulatory stuff that could come from this, that would kind of, that would show that Citron was correct in wanting to short them. But again, this is just something that's going on, and I guess we'll see what goes on and whether or not Twitter is going to have to pay fines or what they're going to have to basically address come that hearing in a couple weeks. So we'll keep an eye on that. And wrapping up with our education, so we're talking about leading indicators and lagging indicators. So again, if you're not really super familiar with technicals and charting cryptocurrencies, even in the traditional markets, you can take a look here and just understand that for leading indicators will lead the price movement. So there's usually a signal there is a signal generated by leading indicators before the price actually goes up or down. And again, there's an additional risk here because if you make a decision off of a leading indicator, they can often whipsaw, and there's a bit of a fake out sometimes. So you may not be correct all the time. It's definitely a little riskier than a lagging indicator, but the advantage here is that you're able to get into a position at a more convenient price, at a price that's going to be more profitable if it does turn out to be correct and the price does go in the way that the indicators are predicting that it will move. So again, examples of leading indicators, we have the relative strength index and stochastics. We'll go into this a little more on TradingView, but again, these are two indicators that I use when I do trade. If I am trading in the markets right now, again, I'm not really doing that because everything is sliding so much. And for lagging indicators, again, it happens after the price moves. You're a little late to the party if there is a movement in price, but again, by doing that, there's decreased risk, and you're kind of taking a lot of the guessing out of the chop that could happen with some of the volatility that goes on in these coins. So you're not really doing anything if there isn't a clear trend at play right now. Lagging indicators work very well for trending markets. So if there is a clear reversal or a pivot, then lagging indicators are going to do a good job of letting you know that. And again, two examples of indicators to use for lagging. Two examples of lagging indicators are moving averages and Bollinger Bands. So again, that's really all for now, and we'll take a look at this on TradingView. Thanks again for tuning in. Again, if you want to subscribe to the newsletter, dailybit.news, follow us on Twitter, LinkedIn, Medium. We're posting our blogs there. Facebook, we're posting just any content that we can kind of get our hands on there. And we'll be back tomorrow with more items. But again, before we sign out for the day, just see that. Okay, so we're golden here. Just make this a little bigger for you guys. Okay. Okay, so just taking a look at some of these indicators here. You'll see that also, of course, when you're using these indicators, it's better to zoom out and use a larger time frame. So just to make sure that we have the most information of them all, we can take a look at Bitcoin here. Just clear out some of these other items. So again, for the relative strength index, there's a bunch of different ways that you can track price movements here, but the general idea is that this purple line here, this purple area in the RSI, again, some people like to have the purple area end at 80 for oversold, and like to have it go down to 20 for overbought, and then go to 20 for oversold. But the general idea here is that when the indicator shoots above this line, then that generally means that the asset is oversold. And if there is a dipping back below the 70 line, that would be a signal to initiate a short position and kind of close your position, close your long. So looking at what's going on here with the price, you can see that it does kind of lead price movements in some instances here. So again, just looking to see what's going on. On October 31st, the RSI went oversold and prices continued to rise in Bitcoin for a couple days, and then it dropped below right here. So if you wanted to use this as an indication that you should sell the asset, you could. And you notice that it dips right back above for a little bit, but then shoots back even lower. And this happens when prices are, again, at about $7,000, $7,050 at its lowest. And here, this is where the signal is generated, but prices continue to drop and don't really start dropping for another day or so after that, and they continue to drop for 3 or 4 days on the charts to a low of just around 5,500. So again, if you took a trade on that position, then congratulations, you probably did make some money there. And again, moving forward, looking over here, on December 19th, just as Bitcoin was really flying up to a little short of 20K, RSI became oversold on November 25th and remained oversold for a really, really long time period here until about December 19th. And the oversold signal was generated after the daily candle closed on December 19th, and at that point, the lowest range for price was about $16,400, $500. So if you sold there and kind of just waited it out, I mean, you would be in the money here. And it's really interesting too, looking at these signals for when the product is oversold here. If you looked at when RSI dipped below 30 and then came back into this purple area, that would be a signal to buy the asset. And again, if you took this entry point around $7,500, you would have been able to get up to even $11,000, $12,000 before it kind of hit this resistance here and started tapering off even lower. So again, this, like the indicator signals here, usually come prior to a change in price movement. So again, with that, there's a risk. Obviously, it doesn't work all the time. So you just have to use a way to kind of make sure that you are making wise decisions, is to look at other indicators too and make sure that there is some confluence in your decision. Another indicator here that is leading is the RSI, or is the stochastic RSI. And again, usually what happens here is that there's a crossover between the blue indicator, which is a faster moving RSI oscillator, and the red line here, which is a slower moving oscillator. So the idea here, again, whenever there's a crossing the blue, crossing the orange, underneath about 20 again, which would represent that the asset is oversold, this would generate a buy signal. And again, if you follow this all the way up to, if you just bought in right here, you would have been in the clear all the way up to just about 16,500. So again, that's like a 200-300% change And again, obviously there was kind of some difficulty in predicting that ahead of time because that's where most of the bull market came from. But again, just following that and then taking a sell position even right here, you would have definitely missed out on a bunch of this move. But again, if it would have been too late to sell if you were waiting for another sell-off here. I mean, if you took this sell signal at about 16,000, you would have been well off. Again, looking here, price doesn't really follow the indicator until a little after January 1st, where we see a couple $1,000s increase, and then there's a sell signal generated here when it's in the oversold territory, and again, we can see that it really does start to fall for a while there. So again, it's not always accurate, and it shouldn't be used as an automatic buy or sell, but it does give some ideas about where the price could move. As for lagging indicators, a very helpful one I find is Bollinger Bands. And again, with Bollinger Bands, the idea is that this line here is the median price movement, and the outside widths of the Bollinger Bands represent 2 standard deviations of the average price. So whenever the Bollinger Bands are really extended and the price extends outside of the Bollinger Bands, then that's going to be a signal that you should sell the asset. However, the price, because it's lagging, there's really not confirmation that it's going to happen until after. There's no, I guess, signal generated until after the price begins to move. So you have to kind of wait for this downward trend to occur, this trend reversal to take place in order to take advantage of Bollinger Bands. And again, as you can see, whenever there's really a testing of these outer limits, for the most part, it's a pretty reliable signal to use the Bollinger Bands. Invented by John Bollinger. He's pretty active in the community on Twitter if you want to follow him and kind of get an idea of what he's talking about. And again, looking at moving averages for another lagging indicator. Sorry, not momentum. Moving averages here, you can play with them in a couple of ways. One of the things that a lot of technical chartists are looking at right now is this idea of a death cross, which would basically mean that there's a crossover of the faster moving average, which we're going to mark as green, which is a 50-day moving average of price, and the slower moving average, which is a 200-day moving average of price action. So again, the idea of a death cross is that the short-term downtrend, or the short-term trend in price, is moving down quicker than the long-term trend. So right now we can see that there really is, it's becoming very, very close right now for a death cross. And the idea is that once that happens, again, we might go into a very, very prolonged downward trend period, and we could see a pretty crazy bear market for a while. But looking back historically, we've had an uptrend where the moving average for the 50-day period has been above the 200 moving average for price since about, just about the beginning of October 2015, and this was when Bitcoin was at about $230. So, and the last time that there was this crossover, we saw a death cross take place at just about April 2014, and as we saw, I mean, this went on for, we didn't see us come out of this for 570 days. So I mean, that's a little over, it's about a year and a half, a year and 3/4. So if there is a similar death cross here, then the market could be in a bit of trouble for future reference. That's what a lot of chartists are concerned about, and that's why we're really not seeing much action right now, because things are really hanging in the balance here to see if we're going to get a similar cross here, and we're going to see the green dip down below the red. But again, you don't necessarily have to use 250 for your periods here. You can use other balances. If you look at 100-day moving average, there's already been a death cross taking place here, and again, it's this is really why there hasn't been much growth in the market. It's clearly in a downtrend. We haven't had much recovery in a while. And the fact that, again, this is lagging because the price started to decline here, but there isn't a confirmation that there is a death cross of sorts for, I mean, again, like another 2 months after the fact. So it's there's a downside to it, but if you were to initiate a short position here, then, I mean, at 11.8, right now prices are around 7.5. So again, if you were to short Bitcoin right there, based off the death cross, there you're definitely missing out on a substantial amount of the run, but you're playing it safe and you're making sure that you're not getting lost in or confused by the volatility. So again, those are 2 quick overviews of leading and lagging indicators. If you want to get more understanding and education on those, take a look at Baby Pips, take a look online. There's a ton of resources on the internet that you can use to help you out here. But again, that's really it for today. We'll come back tomorrow with some stories just to cap off the week. It might be a little slower because tomorrow's Good Friday. Obviously, anybody celebrating Easter and Passover aren't going to be at the office. The markets are closed. So we might have a shorter version tomorrow. But again, just stay tuned. We're still going to do the stream. We're still going to put out the newsletter. So stay tuned, subscribe. And again, until then, thanks for tuning in, and we'll talk to you guys tomorrow. All right, see ya. Bye.